Hi, this is Rick Rodriguez, and I'm a certified reverse mortgage professional here at Fairway Independent Mortgage Corporation, and I help retirees put their home equity to better use. And today, we're going to talk about the 3 biggest misconceptions about a reverse mortgage. The first one being is that the bank owns the house. Wow, this hasn't been that way since 1989, when FHA began to federally insure reverse mortgages. The bank does not own the home. This is just a mortgage lien against the property, period. Like any other mortgage lien, it doesn't take title rights from someone. In fact, you're able to still transfer the title of the home when you're no longer living in the home to your beneficiary, and they will be able to take title of the home. Of course, there's a mortgage against the property that needs to be paid in full at that time, but the point is, you are the homeowner. You still have title to the property. Misconception number 2 is that the bank is going to take all my equity. That hasn't been that way either since 1989, because since then, the bank does not share in on the appreciation of the home like private reverse mortgages did prior to 1989. So since then, the bank is only entitled to whatever the mortgage balance is. And the mortgage balance is very transparent. Every month you get a mortgage statement, shows you exactly what your balance is, so it's never going to be a mystery. You're never going to be in the dark about what do I owe on my reverse mortgage. And in the end, the way the reverse mortgages are designed to work is that there is going to be a large amount of equity still left behind to their estate or their beneficiaries. The third thing that people do not know about the reverse mortgage, that's perhaps the most important thing, and that is the growing line of credit. Yes, there is a growing line of credit. It's like a HELOC, a home equity line of credit, but far superior. Within the reverse mortgage, one of the options on how you can convert your home's equity into cash is by having it placed in a reverse mortgage line of credit, similar to a home equity line of credit. However, different in a few areas. Number 1, there is no payment on a reverse mortgage line of credit, unlike a home equity line of credit. Number 2, the reverse mortgage line of credit is in place for life, for as long as you are living in the home and maintaining the requirements. It has to be primary residence, you're paying property taxes, you're paying homeowners insurance. As long as you're doing that, the reverse mortgage line of credit will be in place for life. And the big difference is that any funds that you keep in a line of credit will grow at the exact same interest rate as the loan balance is growing. So it's working like a savings account almost within your reverse mortgage, allowing you to have more funds to borrow from your reverse mortgage over time. That is perhaps the biggest factor of the reverse mortgage that most people, I'm going to say 10 out of 10 people, do not know that exists. So if you want to learn more about these 3 misconceptions or anything at all about reverse mortgages, contact myself, my staff. We're here to help and happy to help you better understand what a reverse mortgage truly is.